is nothing but your government securities. This risk-free rate of security is nothing but your government securities, which will be including government bonds, treasury bonds, all those things. So that's why they call as your risk-free rate of returns. Means we don't have any kind of a risk with our investment, but return will be always less. Why? Because it is a risk-free rate of return. So always the government securities will be giving a less returns, but the full securities will be there because it's a zero risk, and return on market always is having the high risky one. So whenever we are having a difference between this risk on market and risk free return, it is called as your risk premium. So the formula is risk free plus beta into RM minus RF. So if you look at the problem, the return on X limited and the market is given below. So calculate the CAPM return if the risk-free rate of return is 8%. In the problem, they have mentioned 8% is the risk-free rate of return. If anybody wants to take a pic, you can take the screenshot of the this pic mark. You can take the screenshot of this particular problem. Okay. So the risk-free rate of return is 8%. Information they have given written on market and written on security X limited. So 15, 7, minus 7, 19, 28, 14, 25, and market 12, 1, 14, 24, 630. So always you have to remember that always the written on market will be indicated with X and written on portfolio will be indicated with XYZ or PQRS 1, 2, 3, 4, ABC, whatever the name you want to give, you can give. But always the market will be indicated with X only. Okay. So the formula for the beta coefficient is n into summation xy minus summation x summation y divided by n into summation x square minus summation x whole square. This is a formula for the beta coefficient. So in this problem, what is X here? X is 6 years information they have given, and XY we need to calculate, and X square we need to calculate. Here X is nothing but your market. So X square we are going to calculate, that is 12 square, 1 square, 14 square, 24 square, 16 square, and 30 square. XY, so you have to multiply 15 into 12, 7 into 1, all those things. So whenever we will multiply all these things, we are going to get the summation. X square summation is 2073 and XY summation is 207. So if you are going to apply these values in beta coefficient, so we will be getting 1.12. Always remember that the beta should be always lies in between below 1. Always the beta should be lie below 1. If the beta is going to have more beta, that is more than 1, then the security is high secure. That is the risk security with that particular risk is very high. So we will be considered this portfolio, means the risk which is related to this market and this portfolio is very high. So why? Because when we have calculated the beta coefficient, we got the value of 1.12. So return on market, the formula for return on market is summation x by n. So what is summation x here? 97. 97 divided by 6 is going to give the return on market, that is 16. That is your 16.16. So simply if you are going to apply in CAPM return, that is RF plus beta into RM minus RF, we'll be getting 17.14. So return on portfolio, that is according to the CAPM model. I don't know the exact, what is that, whether you are getting in-depth about the problems or the theory. So theory in the previous class I've covered. So if at all they have given anything mentioned in the problem, that means calculate the return on portfolio according to CAPM method or according to Markowitz method, Sharpe's method. In that cases, you have to go with the formulas. The different formulas I have given in the last Sunday. Okay. So if at all they have not yet mentioned, if I'm not wrong, some people have taken the structure, measurement of risk and return structure also I have given in the last class. So go with that formula. If they have mentioned any model, go according to the model formula. So this is CAPM model. So that's why we have been using this formula, RF plus beta into RM minus RF. So we got 17.17. This is the return on portfolio according to the CAPM method. Okay, ma? So some more problems I'll explain. Okay, if you look at this, find CAPM return if the securities and portfolios from the details given below. So here they have given the 3 security cases, that is A, B, C securities, and with the probability case they have given. Means with the probability case means individually we have to calculate the risk on each securities, risk on market, and return on each securities, return on portfolio, and risk on portfolio. and we have to evaluate according to the CAPM model. Okay, so little bit koncham lengthy ga untundi, but I'll explain. So what is the question they have given? They have given the condition, only 3 conditions, that is good condition, normal condition, and bad conditions, and written on in these condition of A security, B security, and C security. A security 30, 15 minus 12, 10, 15 minus 5. Next is minus 5, 10, 15.
Madam,
This is
screen
the
is
written on securities, and probability they have given 0.4, 0.4, and 0.2. So what is the formula for the single securities with the probability in the structure I have given? It is summation Px. That is, if you look at market, they have indicated with X. Market written 30, 15, 10. So written on market is Px. Written on A securities, AP. Written on B securities, BP. Written on C securities, PC. Okay. So probably we
Madam,
have to multiply with the probability. So 30 into 0.4, 15 into 0.4, 12 into 0.2. 10 into 0.4, 15 into 0.4, minus 5 into 0.2. Minus 5 into 0.4, 10 into 0.4, 15 into 0.4. These are all the return on securities. Written on market, they have given in the problem 30, 15, 20, 10 minus 10. So 0.4 into 30, 0.4 into 15, 0.2 into minus 10. So if you look at AP, PB, PC, PX, that is we are multiplying probability with each security and market. The summations, that is 15.6956 are nothing but your written on securities and written on market. So if you want to go for
Madam,
the, want to calculate the risk,
screen
we
is
need to
not
go
visible,
for the
madam.
deviation. Hello?
Screen is not
Ma'am,
visible, madam.
Huh?
screen is
We
not
cannot see
visible.
screen. Screen is not visible, madam. Whatever you are explaining,
We did not
we
visible.
couldn't see. Yes, ma'am.
I have shared the screen, ma. Wait. Screen is not visible. Now you can see.
No, ma'am.
Hello?
No, ma'am. Yeah,
Yeah,
yes.
now it's
Already
No.
I'm sharing.
Yeah, now it's visible.
Hello?
now it's visible, ma'am.
Oh, now it visible. Previously
Yeah.
it was not. Okay, okay. Look at these conditions. I'll explain one for one. Once again, good condition, normal condition, bad condition, and written on ABC securities and probability and written on market. Okay. So simply I am multiplying with the probability with A, probability with B, probability with C securities, and probability with market. That is X. It is going to give AP, PB, BC, PX. Okay. So the summation of these is going to give the written on each securities and market. That is written on A securities 15.6, written on B securities 9, written on C securities 5, written on market is 16. So to calculate the risk, we need to go for the deviation, that is DA, DB, DC, DX. And we need to know what is the formula for this risk on single securities, summation PDX square under root. Okay. So summation PDX square. And for the covariance, we need to calculate PDA dx, PDB dx, PDC dx. Why? Because we have to multiply with the probability and the deviation with market with all securities. So if you multiply with all the securities, we are going to get these values. If anybody want to take the screenshot, you can take the screenshot, ma. After taking the screenshot, please let me know so that I will be moving on to the next pick.
Yes, ma'am, we have taken.
You have taken, all of you?
Yes, ma'am.
So I'm closing this pick. Okay, fine. Fine. So here written on each securities, that is A is 15.6, B is 9, C is 5, market is 16. So written on visible ama? Oh, sorry, not visible. Ippudu visible?
Yes, ma'am.
Yes, ma'am.
Okay. Written on market is summation PDX square under root. So what is it? DX square, PDX square under 214. That is under root is going to give 14.63. The formula for beta coefficient is covariance of XY divided by risk on market. So here we are having a two formulas for beta coefficient. Previously I have given, in the previous problem, I have given n into summation XY minus summation X summation Y divided by n into summation X square minus summation X whole square. That is a beta coefficient formula. And this is one more formula for the beta coefficient, covariance of xy divided by risk on market square. So based upon the information given in the problems, we are going to use the formula. So this is one more formula. If you want, you can highlight. This is beta coefficient. Zoom ayindama andarki. Zoom laga anpistunda.
Yes,
కనిపిస్తుంది
ma'am.
Okay. So this is one more formula. Beta coefficient. So problem lo information ni batti we are going to use the formula. Fine. So this is the formula for beta coefficient. So simply we are going to apply in this formula. So before that, we have to go for the covariance of each securities. That is covariance of XA, covariance of XB, covariance of XC. Because we have to do the we have to do the correlation between market and each security. So market with A, market with B, market with C. That is nothing but your summation PDXA, summation PDXB, summation PDXTC. So that will be going to give the covariance. So when we are applying all these values in covariance, that is covariance of XA, covariance of XB, covariance of XC, that is 1.05, 0.35 minus 0.5. We got all the beta values. Now we are going to apply in simply CAPM return. So CAPM return formula into manaki RF plus beta into RM minus RF. CAPM return of A security, CAPM return of B security, CAPM return of C security. So a risk-free rate of return in the problem, they have given 8%, 8%, 8%, 8, 8, 8. Directly, we are going to take the 8 values, percentage values, not 0.08. Okay, na? Plus beta of A value entama 1.05. Beta of B value 0.35. Beta of C value 0.15. So 1.05, 0.35 minus 0.5. Return on market, already we have calculated the return on market is 16. Ikkada calculate chesam kada return on market, the 16. So return on market 16, 16, 16 minus risk free return minus 8, 8. So we have got that 16.4, 10.8, 3.9. These are all the CAPM return of each securities. ఒక్కొక్క సెక్యూరిటీ మీద CAPM return. Now we have to combine this. అంటే by combining the average beta, we can calculate the CAPM return individually. So మన betas ఏంటి 1.05, 0.35 minus 5.1 divided by 3. Average beta తీసుకుంటే we got 0.296. With the help of average beta, we can evaluate the return on portfolio. Entire portfolio return on portfolio calculate చేస్తే that is 5.68. అర్థమైందా? Yes. One more thing is your capital market line. This is one more method. This capital market line is nothing but a straight line which we have been considering for the most efficient securities and investor who's going to purchase to maximize his return with the minimum amount of risk. So this model is going to help the investor to maximize the risk with a minimum risk portfolio. So this is the extension of the traditional model. ఈ పిక్ తీసుకున్నారమ్మా? పిక్ తీసుకున్నారా?
తీసుకున్నాం.
ఓకే, నేను నెక్స్ట్ పిక్ వెళ్ళిపోతాను. సో సిఎంఎల్ మోడల్. So with the help of your acquiring the existing securities, means already whatever the securities which is available, he is going to take with the minimum risk. So in this method, he will be expecting the minimum, that is guaranteed risk, and with the return also. So definitely the risk will be there, but simultaneously return will be there, which is going to give to the investor. And additionally, he will be guaranteeing based upon the amount of risk the investor is ready to take the risk. Kachitanga, he will be expecting some minimum rate of risk. So based upon the minimum rate of risk, he will be getting some return. So that will be there in the things. So there's a formula for CML return. The formula for CML return, please take down this formula. RF plus alpha return, alpha into risk on security. This
Ma'am,
is the
screen
formula.
not visible, ma'am.
Okay, wait. Ippudu?
Yes, ma'am.
Okay, so this is the formula for return of CML return. RF plus alpha into risk on securities. This is the formula for CML return. Okay. So where is alpha is nothing but the slope of capital market line, the line which we have been considering, and alpha formula for the alpha formula is RM minus RF divided by risk on market. This is the formula for alpha. This is CML, SML. See, SML and CAPM formula is one and the same. SML and CAPM formula one and the same. Why? Because SML is also going to evaluate for the efficient portfolio for the investor. So efficient securities in the portfolio can be chosen by using the SML. So the relationship between the return covariance with the market of the securities in the portfolio will be called as a SML. So if you look at the formula for SML, same RF plus beta into RM minus RS. How we have the CAPM return formula, same SML and CAPM formula కూడా same ఉంటుంది. ఓకేనా? సో CML formula వచ్చేసి మనకి RF plus alpha sigma, that is risk on securities, and SML and CAPM formula one and the same, that is RF plus beta into RM minus RF. So if you look at this question, find CAPM and CML return from the details given below. If risk-free return is 15% and the return on security and market is given as follows. So number of years they have given for 1 to 8 years. Return on market, return on security they have given. Return on market 12, 10, 12, 16, 10, 14, 16, 6. And return on securities they have given 10, 12, 15, 20, 16, 16, 18, 10. So if you look at this information, which is the most suitable beta formula for us, that is first formula, that is n into summation xy minus summation x into summation y divided by n into summation x square. ఈ formula which is more suitable, ఎందుకంటే మనకు number of years ఇచ్చాడు and xy information clear గా ఇచ్చాడు. Fine. So x square and xy. And here we have to calculate the return risk on single securities also. Why? Because we have to calculate the risk on CML also. CML calculate చేయాలంటే మనకి risk on security కావాలి. This is risk on security కావాలి. So that's why we have been going for the deviation. dx, dx square, dy, dy square. So dx is nothing but your x minus x bar. What is x bar here? Summation x by n. Summation x by ఎంత మనకి 96 divided by 8, which is going to give the x bar, that is 12. So here 12 minus 12 is going to give 0. 10 minus 12 is going to give minus 2. 12 minus 12, 0. 16 minus 12 minus 4. 10 minus 12 minus 2. 14 minus 2 is 2. 16 minus 12 is 4. 6 minus 12 is minus 6. Okay. So dx square, we have to calculate the dx square, and dy we have to do. dy is nothing but y minus y bar. What is y bar? Summation of y by n. Summation of y is 117 divided by 8, which is going to give your y bar, and but we have to deduct from y minus y bar. After that, we need to go for the dy square. Okay. Have you taken the screenshot, ma? Screenshot తీసుకున్నారమ్మా?
Yes, ma'am.
Yes, ma'am.
స్క్రీన్ కనిపిస్తుంది కదా? స్క్రీన్ మరి ఇంకా స్క్రీన్ షాట్
కనిపిస్తుంది మ్యామ్, ఆల్రెడీ షేర్ చేసాను.
చాట్ లో స్క్రీన్ కనిపించట్లేదని పెట్టారు ఎవరో. ఓకే, తీసేసుకున్నారా? నెక్స్ట్ వన్ ఐ విల్ గివ్. సో రిస్క్ ఆన్ మార్కెట్ సమ్మేషన్ పీడిఎక్స్ స్క్వేర్ ఇదేనా? ఎస్, ఇదే ఇందాక ఇచ్చింది ప్రాబబిలిటీయా? Okay. So what is the formula for beta coefficient? Summation n into summation xy minus summation x into summation y divided by n into summation x square minus summation x whole square. So after applying the values in beta coefficient, we got the beta value 0.85. Okay. Then we need to calculate the return on market, that is nothing but your 96 by 8, that is going to give x bar, and risk on y, that is y bar is going to give like this. So risk on market, that is summation dx square by n under root, it is going to give 3.16, that is risk on market. And risk on securities, summation dy square by n under root. So it will going to give the return on market, that is 4.4. Alpha RM minus RF divided by risk on market. Screen కనిపిస్తుంది కదా? Risk on market. So 12 minus 5 divided by 3.16 is going to give 0.95 is the alpha. So simply we are going to apply CAPM, RF plus beta into RM minus RF. RF is risk-free is 15. Risk-free is 15 plus beta is we got 0.85. 12 minus 15. So return CML return is going to give the value of 12.45. CML is going to give RF plus alpha into risk on Y securities. Risk free is 15 plus 0.95 into 3.43 is going to give 0.77. The value is 0.77. So this is according to the CML and SML or CAPM. These are all the problems related to your this one. Okay, ma?
Okay, ma'am.
Okay. I'll share some other problems which is related to valuation of stock. Valuation of stock. Okay. Okay. Screen is visible, ma? The screen is
Yes, ma'am.
visible.
Yes,
So
ma'am.
dividend capitalization method. So under your common stock value analysis or valuation of common stock or fixed income securities also we can say. So under this securities returns, we got the value. We will be having the models which is related to your dividend capitalization methods. So the equities are perpetual securities. Hence, the whatever the dividends which are been payment which are been made to the dividend shareholders, or that is preference shareholders, which are been already we are been in periodical way. So every year they will be receiving a dividends. Preference shareholders will be receiving. So that's what they will call a regular periodical way. They will be the equity shareholders will be paying to the preference shareholders. So the intrinsic, the real values of the share, which is represented by the following equation. So whatever the dividends which have been paid by the equity shareholders to the preference shareholders, how they will be calculating with the help of dividend capitalization method. I mean, this is a formula. If you want, please take down the screenshot. P naught, that is nothing but your present value of the share. P naught is nothing but your present value of the share. That is D1 divided by 1 plus K to the power of 1 plus D2 divided by 1 plus K to the power of 2 up to Dn divided by 1 plus K to the power of n. Ante how many number of years the dividends will be given. See, I am interested in only 2 years. So I will be getting only 2 years dividend. Some people work the longer period of time. Some people 5 years, some people 10 years, some people 12 years, some people only 1 year short term. So that's why this is the present value of the share where we have been evaluating the dividends for the number of years. So in simple, P naught is equal to summation Ni is equal to 1 dt. That is nothing but your time divided by 1 plus Ke to the power of t. This is the formula for the dividend capitalization method. అందులో వచ్చేసి మనకి సింగిల్ ఇండెక్స్ పీరియడ్ మెథడ్ అంటే ఓన్లీ వెన్ ఎవర్ డివిడెండ్స్ హ్యాస్ బిన్ గివెన్ ఫర్ 1 year పీరియడ్ ఆఫ్ టైం. So whenever only the investor has been investing only for the 1 year period of time, that we called as a single period valuation model. In this method, the investor is going to get the interest as well as the estimated sales proceeding of the share at the end of the first year. Why? Because he will be investing only for the 1 year. And at the end of the year, whatever the principal amount he has invested, plus the interest or the dividends which will be getting on his investment. At the end, he will be getting simultaneously both the things. Why? Because it is for only single period valuation method, that is 1 year period. So to arrive the present value of the share, the following formula is going to use by the investors. That is P naught. That is nothing but a present value of the share divided by D1 divided by 1 plus K to the power of 1 plus P1 divided by 1 plus K to the power of 1. Only 1 in this could num because for only 1 year period we are investing. So P naught is equal to D1 plus P1 divided by 1 plus K to the power of 1. What is P naught? Present value of the share. P1 is expected price of the share at the end of the year. Ante if you have invested 1000 rupees in this year, 2024 lo invest chesaru January 1st ki. So when is your maturity period? 31st December 2025. Sorry, 1st this January 2025 ki meedi maturity period. So that is called as a present value. At the end of the year, how many, what is the price you are been expecting? Enta, if you are expecting 10% means 1000 into 10% is going to give. Ante December 1st 2025 ki you are going to receive 1100 rupees. 1000 rupees invest చేస్తారు ఫస్ట్ 1 year తర్వాత 1100 rupees you are going to receive. That is expected price of the share at the end of the year. D1 is nothing but expected dividend at the end. What is the amount of dividend you are receiving? That is 100 rupees is the amount of dividend you are receiving. These are the single periodization value method. Okay. You want to take screenshot, you can take the screenshot, ma. స్క్రీన్ షాట్ తీసుకోవాలనుకుంటే తీసుకోండి మా.
Okay, ma'am. Done.
ఓకేనా, నెక్స్ట్ పిక్ ఐల్ షేర్. సో వాట్ సారీ, పిక్ షేర్ ఇప్పుడు షేర్ అవుతుందా?
Yes, ma'am.
D1. So what is D1 here? Again, you are having one more formula for D1 is that nothing but D naught into 1 plus G. Ante present dividend plus 1 year growth period. Ante present dividends unnadi plus 1 year you are been waiting for 1 year now. So daniki growth period enta. That is 1 plus G. D naught is nothing but a present dividend and G is growth rate. If you look at the small problem, X Limited expected to pay rupee 1 as a dividends and for the price of rupees 9 a year. Hence, at what price the share can be purchased at present if the required rate of return is 12%. Okay. So he will be expecting some return on his investment, that is dividends, rupees 1 on his dividend for a price of rupees 9. If you want to purchase the price, what is the present value of the share if the required rate of return is 12%? So give dividends I have given at the end of the year, how many, what is the dividend they will be receiving? 1 rupee they will be receiving. That is D1 they have given 1 rupee. Expected price at the end of the year, ఎంత ఇచ్చారు? ప్రైస్ మనకి P1 9 rupees. Cost of equity, that is K, is 0.12, 12%. So P0, we have to evaluate the present value of the share. What is the formula? D1 plus P1 divided by 1 plus K to the power of 1. D1 is 1, present value of the share is 9 rupees divided by 1 plus 12%, that is 0.12. How many years? 1 year, that is 1, which is going to give 8.93. సో యాక్చువల్లీ మార్కెట్ వాల్యూ వచ్చేసి 8.93, బట్ మనకి ఎంత అమ్ముతున్నాడు వాడు? 9 రూపీస్కి అమ్ముతున్నాడు. ఇస్ ఇట్ నాట్? ఎస్ మా. సో ద సెల్లింగ్ ప్రైస్ ఆఫ్ ద షేర్ ఈస్ rupees 60 అండ్ డివిడెండ్స్ విచ్ కరెంట్ పేడ్ బై ద కంపెనీ ఈస్ rupees 1. ఇది నెక్స్ట్ క్వశ్చన్ మా. సో యాక్చువల్లీ మార్కెట్లో ఉంది మనకి ఎంత? 9 రూపీస్. 9 రూపీస్ అని చెప్తున్నాడు. బట్ వెన్ ఎవర్ వీ హ్యావ్ ఇవాల్యుయేట్ ద ప్రెసెంట్ వాల్యూ ఆఫ్ దట్ పర్టికులర్ షేర్ ఈస్ దట్ 8 rupees 93 paisa, అంటే 0.07 paisa he will be selling more. అర్థమైందా? Next question, if you look at the selling price of a share is rupees 60, dividend at the present paid by the company is rupees 1.8 and expected growth rate is 10% and the required rate of return is 9%. Calculate the price of the share and advise the investors. So we have to be advise the investor. What is that? Whatever the selling price which is there for the particular share in the market is 60 rupees and dividend we have been receiving at present by the company is 1 rupee 8 paisa. And the expected growth rate for that particular share is 10%. And the required rate of return is 9%. We have to calculate the present value. Actually, what is the present value of that particular share, which is available in the market? 60. And we have to advise the investor whether he has to buy that particular share or he has to sell with the existing share. So what is the information they have given? D naught. Ante the present dividends enti icharu 1.8 paisa. Growth rate 10%. And cost of equity is, that is cost of 0.099%. So we have to calculate the D1, that is dividends, expected dividends. For the formula D naught into 1 plus G. D naught into 1.8 into 1 plus growth rate is going to 0. So future lo manaki iche dividends enta 1.80. Present istunna dividends anta 1 rupee 80 paisa. After 1 year, how many? What is the dividend we are going to receive? 1 rupees 98 paisa. Okay na? So with this we can simply evaluate the present value of the share. Present value of the share formula D1 plus P1 divided by 1 plus K to the power of 1. D1 enti 1.98 plus ఇప్పుడున్న ప్రెసెంట్ వాల్యూ మనకి ఇచ్చిన ఆఫర్ ఎంత? 60 డివైడెడ్ బై 1 ప్లస్ 0.09, 5686 paisa. Actually the present value of the share is 5686 paisa, but in the market it will be, what is the thing it is there? 60 paisa, 60 rupees. So it is advisable to the investor, it is more than the market share, so it is advisable to sell his shares. అంటే తన దగ్గర ఒకవేళ షేర్స్ ఉంటే గనక the value of the particular share is 56 only, but in the market it will be available 60 rupees కొనడానికి కూడా రెడీగా ఉన్నవాళ్ళు. సో మీ దగ్గర ఎగ్జిస్టింగ్ షేర్స్ ఉంటే you can sell it. ఓకే, మీ దగ్గర ఏం షేర్స్ లేవు బట్ దే ఆర్ ఆఫరింగ్ ఫర్ 60 rupees, no need to buy. Why? Because the present value itself is 56 paisa. మీ దగ్గర ఉంటే గనక you can sell it. Why? Because you will be getting the advantage of 60 minus 56. ఓకేనా? అర్థమైందా?
Yes, ma'am.
ఓకే. See here, whenever you are been, ఇప్పుడు single year dividends only we have calculated and sing for only 1 year period of time, present value of the share only we have calculated. If you look at this, the company two-stage model, the one two-stage model antam, if you want, you can take the screenshot of this two-stage model. And more than 1 year period when we are investing more than 1 year period. So if the investor would like to hold the securities for more than 1 year period, the present value of the securities can be obtained by using the following formula. That is present value of the share is summation n I is equal to 1 dt into 1 plus gt to the power of t 1 plus k to the power of t plus dn into 1 plus g2 divided by k minus g2 into 1 minus k. This is the formula. D is dividend per share. G1 is initial growth rate and starting growth rate. G2 is long term growth rate and n is number of years where the G1 is going to exist. Dn is nothing but your d naught into 1 plus g to the power of n. This is the formula. So if you look at the question, the company's growth rate is 20% per annum for the last 5 years. The same rate is expected to generate for further 5 years period of before it reaches to 6%. The previous dividends paid for is rupees 5 per share. Calculate the value of the share if KE is 15%. So what is the information they have given? Growth rate 20% they have given, that is 0.2. Number of years 5 years they have been investing, and growth rate second year growth rate which is 6% nunchi, and present dividend is 0.5. Cost of equity that is equal to 0.15. So first we need to know the DN, that is nothing but your D naught into 1 plus G to the power of N. D naught is what? 0.5 into 1 plus G, that is existing growth rate to the power of 5. N years ki 5 years ki చేసుకుంటున్నాం. So if you look at in the scientific calculator మనం calculate చేస్తే గనక we got DN is 1.24. So growth rate stage model simply we have to apply. DT అంటే ఏంటి? How many years of time we are investing? ఎన్ని ఇయర్స్ మనం ఇన్వెస్ట్ చేస్తున్నాం? సో 5 years. సో 5 years వరకు తీసుకోవాలి మనం. 0.5 1 year, ఇది 1 year, ఇది 2 year, ఇది 3rd year, ఇది 4th year, ఇది 5th year. ఓకేనా? కనిపిస్తుందమ్మా? సో 5 years వరకు సేమ్ వాల్యూ తీసుకోవాలి. ఏంటి? 0.5 into 1 plus growth rate 0.2 first year, 1 plus 15 0.15 first year, 0.15 second year, 0.15 third year, 0.15 fourth year, 0.15 fifth year. Okay, first year, second year, third year, fourth year, fifth year. ఇప్పుడు ఎండ్ చేయాలి కదా మనం. ఎండ్ ఆఫ్ ది 5th year we need to get back our returns as well as our investment. సో డిఎన్ ఏంటి మనం క్యాల్కులేట్ చేసింది ఆల్రెడీ 1.24 into 1 plus కమింగ్ అంటే ఫ్యూచర్ గ్రోత్ రేట్ ఎంత ఇచ్చారు మనకు 0.6 డివైడెడ్ బై కే కాస్ట్ ఆఫ్ ఈక్విటీ మైనస్ గ్రోత్ రేట్ ప్లస్ 1 plus 0.15 to the power of 5. If we have calculated all this value, we got the present value of the share is 10.09. Okay na? Please look at this question and ask any doubts. Two-stage modeling.
మేడం ఇది లాస్ట్ స్టెప్ లో 1.24 పెట్టారు కదా, అది ఎందుకు యాడ్ చేశారు?
ఇది ఫార్ములా చూడండి ఇక్కడ, డిఎన్ ఇంటూ 1 plus G2 K minus G2. ఇది 5 years పీరియడ్ వరకు వీఆర్ బీన్ ఇన్వెస్టింగ్. అయిపోయిందా? 5 years కి ఓన్లీ డివిడెండ్స్ తీసుకుని ఉంటారా మీరు? డివిడెండ్స్ రిసీవ్ చేసుకుంటారా? మీరు పెట్టిన ఇన్వెస్ట్మెంట్ మీకు కావాలి కదా.
యాక్చువల్ ఇన్వెస్ట్మెంట్
మీరు పెట్టిన యాక్చువల్ ఇన్వెస్ట్మెంట్ కూడా కావాలి. అది మీరు 5 years పీరియడ్ చేసుకున్న మీకు గ్రోత్ రేట్ సెకండ్ ఇయర్ గ్రోత్ రేట్ ఉంటుంది కదా G2, అంటే మీకు 5 years లో వచ్చిన గ్రోత్ రేట్ ఎంత? 6% వరకు ఇచ్చాడు వాడు. సో 1.2 అంటే మీ డిఎన్ గా అనుకున్నారు ఆల్రెడీ. మీరు ఇక్కడ చూడండి ఎంత ఉంది, 1.24 ఎండ్ కి. డివిడెండ్స్ 1 రూపీ 24 పైసా ప్లస్ గ్రోత్ రేట్ ఎంత ఇచ్చిండు? 6% డివైడెడ్ బై మీ రిటర్న్ ఎవ్రీ ఇయర్ రిటర్న్ ఎంత వచ్చింది? 15% మైనస్ యువర్ గ్రోత్ రేట్ చేసి దాన్ని ఇన్వెస్ట్మెంట్ పివి ఫ్యాక్టర్స్ కనుక్కుంటే యూ విల్ బి గెటింగ్ దట్ 1 పాయింట్. మీ ఎట్ ఎ టైమ్ ఇన్వెస్ట్ అంటే మొత్తం కలిపి యువర్ ప్రెసెంట్ వాల్యూ ఆఫ్ ద షేర్ ఈస్ 10 rupees 9 paisa. ఓకేనా? ఇంకా ఏమైనా డౌట్స్ ఉంటే అడగండి అమ్మా. 1 minute. Yes, ma. If you have any doubts, you can ask, ma. This is about your common stock value analysis problems. Whatever the problems you will be expecting. So I have taught the problems. Single index model, valuation of common stock, 2 stage, 1 stage. Any doubts you can ask. Daily this much only must strengthen. If you have any doubts, you can ask. తీసుకున్నారా పిక్స్ తీసుకున్నారమ్మా?
Yes, ma'am.
Yes, ma'am.
Santu, you are only na Santu Chaudhary something.
Yes, ma'am.
Last week you only asked me na question. I mean problems. మీరే కదా అడిగింది?
Yes, ma'am.
ఓకే గుడ్ గుడ్ అయిపోయినా ఇవే ప్రాబ్లమ్స్ నా మోస్ట్ ప్రాబ్లమ్ మీకు వచ్చే ప్రాబ్లమ్స్ ఈ మెథడ్.
Okay, ma'am.
Any doubts ma?
No, ma'am.
ఓకే నో డౌట్స్ యూ కెన్ లీవ్ ద క్లాస్ మా. ఇంకా జాయిన్ అయ్యారు పాపం. అంత అయిపోయినాక జాయిన్ అయ్యారు వీళ్ళు. సమ్వన్ స్వాతి అండ్ సమ్ నంబర్. Swati, she is not from Finanza. She went off. మీ క్లాసేనా వీళ్ళు వేరే వాళ్ళ?
Don't know, ma'am. తెలియదు.
తెలీదా? స్క్రీన్ నేను స్టాప్ చేస్తున్నాను షేర్ చేయడం. మీకు డౌట్స్ ఏమైనా ఉంటే నన్ను అడుగు. ఓకే. If no doubts, you can leave the class, ma. నెక్స్ట్ థియరీ మిగిలింది మీకు. ఆ థియరీ నెక్స్ట్ వీక్ లో చెప్పేస్తాను అయిపోతుంది. ప్రాబ్లమ్స్ ఆల్ ప్రాబ్లమ్స్ హ్యావ్ కవర్. ఆల్ ద ప్రాబ్లమ్స్ హ్యావ్ కవర్. Anybody wants the notes of your problematic? Some of your friends have taken the screenshots of problems. You can take the, you can share that pics. Anybody is want to learn problems? can ask your friends. They have taken the pics of the problems. You can ask doubts, ma, no problem. Because we have completed problems. Either in written on securities according to CAPM, CML, SML, or single index model. Prudent capitalization model, single period, two phase. Any problem? Any doubts? You can ask. No. Yeah. Oh,
మేడం థియరీ పార్ట్ లాగా ఎక్స్ప్లెయిన్ చేస్తారా సింగిల్ ఇండెక్స్ మోడల్ షార్ప్ ఇండెక్స్ మోడల్
ఏంటమ్మా?
థియరీ పార్ట్ కొంచెం లైట్ గా అంటే కొంచెం ఐడియాకి వస్తుంది.
నెక్స్ట్ వీక్ ఇంకా లాస్ట్ పార్ట్ మిగిలింది కదా థియరీ, నెక్స్ట్ వీక్ చెప్పేస్తాను.
ఓకే ఓకే
ఓకే, నెక్స్ట్ వీక్ ఉంది కదా, ఇంకా 2 క్లాసెస్ ఉన్నాయి కదా, సాటర్డే అండ్ సండే. ఆ రిమైనింగ్ 2
ఓకే
క్లాసెస్ థియరీ, లాస్ట్ యూనిట్ థియరీ ఉంది ఇంకా.
ఓకే
ఓకేనా?
ఓకే
2 యూనిట్స్ లో అనుకుంటా ప్రాబ్లమ్స్ ఉన్నాయి. లాస్ట్ వీక్ ఒక యూనిట్, ఇప్పుడు ఒక ప్రాబ్లమెటిక్స్ అయిపోయాయి. లాస్ట్ వీక్ మీరు అటెండ్ అయ్యారా సతీష్?
లేదు మ్యామ్ అవ్వలేదు.
ఓకే, లాస్ట్ వీక్ కూడా మనం రిటర్న్ ఆన్ పోర్ట్ఫోలియో, రిస్పాన్స్ పోర్ట్ఫోలియో, సింగిల్ సెక్యూరిటీ, 2 సెక్యూరిటీస్ ప్రాబ్లమ్స్ చేశాను. ఫార్ములాస్ ఇచ్చాను నేను. మీ ఫ్రెండ్ ఎవరు తీసుకున్నారు పిక్స్? ఓకే,
ఓకే మ్యామ్
మీకుందా గ్రూప్స్ ఏమైనా ఉన్నాయా మీకు? అఫీషియల్ గ్రూప్
ఉంది
అలో
మ్యామ్.
షేర్ చేసుకోవచ్చు. ఓకేనా?
ఓకే ఓకే మ్యామ్.
ఓకే. Still anything you'd like to know?
మేడం ఒక చిన్న ఇన్ఫర్మేషన్ మ్యామ్.
చెప్పండి.
మేడం ఇది అంబేద్కర్ యూనివర్సిటీ మనకి మన ఆంధ్రప్రదేశ్లో కూడా ఉన్నాయి కదా మేడం స్టడీ సెంటర్స్. ఇప్పుడు న్యూ అడ్మిషన్స్ కోసము ఇక్కడ మనకేం చూపించట్లేదు. అంటే ఇక్కడ వీళ్ళకి ఫోన్ చేస్తే ఏమన్నారంటే మనకి ఇక్కడ పర్మిషన్ తీసుకోవాలని చెప్పేసి అడుగుతున్నారు. అంటే ఇప్పుడు
సారీ
కొత్త
మా,
బ్యాచ్ వాళ్ళకి.
యాక్చువల్లీ లేదు మా, మేము అవుట్ సోర్స్ ఫ్యాకల్టీ, వీ డోంట్ హ్యావ్ ఎనీ
ఓకే
ఇన్ఫర్మేషన్. యూ కెన్ ఆస్క్ యువర్ కన్సర్న్
ఓకే
ఫ్యాకల్టీ ఆర్ పర్సన్. ఓకేనా? నాకు అస్సలు ఐ డోంట్ హ్యావ్ ఎనీ ఇన్ఫర్మేషన్.
ఓకే ఓకే మ్యామ్. థ్యాంక్ యూ మ్యామ్.
Subject related questions, if you have, you can answer.
ఓకే
You
ఓకే
can
అది
answer, but admin I don't know. Okay?
ఓకే ఓకే మ్యామ్.
Okay. Okay. If no doubts, you can leave the class, ma. No problem.